Hello, everyone. This is Drew from Best of Us Investors working with Mark on our Platinum trading platform. Again, Mark has been investing for over 40 years now and has worked as the director of operation for an online firm for around 10 years. He'll be doing overviews on what he saw in the market and charts from the previous week regarding swing trades, and also share some of the stocks he's keeping an eye on for swing trades for the upcoming week. Now, for a watch list of stocks that are set up for great swing trades with uptrend potentials based on more than 7 indicators each day, along with educational videos on how to read charts, come join our Platinum group and let's get through this tough market together, seeking for great swing trade opportunities and even for great potential entry points for long-term investments as well. So make sure you check the link in the description below for the Platinum membership. And I just want to remind you that this video is not made for financial advice, but for educational purposes only. So, Mark, how was the market last week? And how do you see that it's possible that we have a bunch of layoffs, high inflation, the Fed still continuously, raising the Fed fund rate, and the market is still going up?
I think the market looks at, layoffs as a good thing to help companies' balance sheets that by eliminating excess operating costs. So they look at that as a good thing. So with inflation, the core inflation and everything has been going down. So the market believes that the inflation level is going down. Now, however, the Fed has made several statements, and Powell spoke last week, but he didn't really bring up anything about the markets. But there were several other, Fed governors that spoke and basically said that, yeah, we might slow the pace of raising rates. However, for the foreseeable future this year, we see a prolonged time frame where the rates are going to remain high, and their target is over 5%. And then the market looks at it and says, well, we're seeing, inflation go down, so we really don't believe you. And let's look at the bond market to see why we don't believe you. So it's a don't fight the Fed or fight the Fed, and we'll see who wins on this, whether the Fed blinks or if they do what they say they're going to do and keep rates high throughout this year and not lower the rates. So, and that's why we have market weeks like we had this week. This week, we really had a nice trend up in the markets because the market truly believes that the Fed's going to stop raising rates, and in some cases that they're going to start lowering rates. And that's not what the Fed's been telling us, but history shows the Fed sometimes changes its mind. So we're kind of caught in an area where the market wants to go up, and then good news is bad news, and bad news is good news. And people are buying the rumor and selling the news, and they really don't know which way to go. I don't think that the full effect of layoffs has really hit the market yet. And remember that the stock market is not the economy. The stock market and the economy are totally separate. And it's over time you'll realize that the market and the economy basically move in opposite directions. And sometimes it takes a while for the market and the economy to equalize, and that's what we're seeing right now, I believe. But again, you've got to be vigilant in your investing and your choices of what stocks you get into. If you get into a growth stock like we had during the pandemic, where there was easy money, cheap money out there, and companies that were growing revenues but not growing earnings are definitely having trouble finding that cash now. And you're starting to see some, not only layoffs, but bankruptcies. But the layoffs in the big companies aren't companies that are going to go bankrupt. Your Microsoft or your Apple or your Google, your Meta. They're not going to go bankrupt. They have cash. It's the companies that don't have cash that you want to worry about. So that's why we're seeing the Dow go up. Dow is really full of more established, older dividend-paying stocks that people feel more comfortable in the times of increased inflation and a potential recession. We had a lot of news last week with the CPI came out, and that turned out to be really in line with expectations. And then we had big bank earnings on Friday, and that scared the market way down, and it just went crazy down and then popped back up. So it was a good buying opportunity. And a lot of times the news causes the panic, which causes the volatility in the stocks market. And you got to remember at market open, especially on a Monday, you have a lot of tickets that are been sitting there over the weekend or early in the morning on the books of these traders that they have to trade. So the first half hour is usually chaotic. And that's what we saw on Friday, which gave us some good opportunities to buy into some stocks that we've been watching. So let's take a look at the market in general. and see what's happening in the stock market. So this is a kind of a crazy chart that I use for the S&P 500. You can see over here we had a double top. We predicted that the market would break through the neckline about this distance here, and you can see that's about what it did. We went into a sideways trading range over the holidays with lower volume. And since that time, these are the last week of trading. You can see we've crossed over the 50-day moving average, and then we bounced off the 200-day moving average on Thursday. And then Friday, we actually closed above the 200-day simple moving average. Now, it wasn't a full candle above, and we've done this before. You can go back to our double top to see that. And we also filled this gap that we had right here. So now the only resistance that we have above us is this long-term bearish trend line that goes back to January, and we'll show you that chart in a second. But I believe that based on the history of what we've seen, we probably will bounce off that and we'll see a downward trend in the market. Or if we can get above that and stay above that, that would be significant for the market turning, at least in the S&P, from a bearish trend to a bullish trend. So here's the long-term trend of the S&P chart going back to January of 2022. And you can see here's our trend line, our bearish trend. And even though price action can get above the 200-day, it's been bouncing off of this trend line, 1, 2, a recent one, 3, and now we're coming up to it again. And if history shows us anything, it's that we're probably going to get a bounce off this. And you can already see down here, the Scholastic's trying to roll over a little bit. We're seeing a little flattening of the RSI. So that's why I think that we're probably going to bounce off this on resistance and come down. Now, that may not happen. We may get through this line, and that would pretty much be a major reversal of the market and going positive. So this is going to be an interesting week to watch, especially the S&P 500. Mm-hmm. So let's go and look at some of the companies that we're currently on our watch list. Now here's Copart, CPRT, and you can see we got into CPRT right about here on this white line right here. It's running in a nice channel. You can see we've been bouncing off the lower channel line. We're still in this position at this point. If it got below that channel line, we'd want to get out. Or if you want to take profits before, here's your cost basis right here at 61.61. You could take half your position off. You could take your full position off. It's really up to you on what you want to do. We've had a few bumps on the top trend line, but mostly I'm seeing it on the bottom. But it's been a pretty good trade for us. We've seen with all our indicators and our trend line. Amgen, you can see we got in down here. Actually, this is when it came on the watch list, and then we closed above the 9-day. This is probably where you would have gotten into this trade with one full candle close above. Since then, we've gotten into a sideways trading pattern, and you can see it's just hitting back and forth. This is going to break one way or the other. We're still above the 9-day simple moving average. We're way above the 200-day moving average. We see a little flatness in the stochastic, but we're still above here on the MACD, and we're just above the 50 level on the RSI. So Amgen is still in play. If you get below that 9-day, you certainly want to get out. So this is Penske Automotive Group. We got in back here as we crossed above the 9. This is when we put it on the watch list. Since that time, you can see it's kind of gone sideways, gone up above, used the 50-day simple moving average as support, and then we dropped below on Friday, and now it's using it as resistance, but we're still above the 9. We're still seeing the MACD is still above the signal line, although we're seeing a little bit of a rollover in the RSI, but it's still above 50. Again, at any point, you could take off a position, take some profits, but we do have some room up here to the resistance line. Visa's been a good runner. You can see basically once it crossed the 9-day simple moving average, it's just been days of going up. This was Friday. You can see it wick down. We still have a nice strong 9-day simple moving average, 20-day. We're above the 50. We're still above the signal line on the MACD, and we have a strong RSI above 50. Just below 70. So Visa's been a good runner. We're getting close to the resistance line up here. You may want to take some profit off of this if you were in this trade. Dow's been just a really good runner too, and it probably should have gotten into this one a little earlier. You can see here's where we crossed the 200-day, and that would have been a signal you're above the 9 to get in. I actually got in on Friday. This really wicked down a lot, and it caught a low buy order at this point. We have a lot of room to the top still, but we are like kind of flattening out just a little bit, but we have a nice MACD. a good stochastic, and you can see that we really have a lot of momentum in RSI. Some people would think that's oversold, but you can see these RSIs run sideways for a long time. So we'll be watching this one. I like Dow as a company, and we'll see what happens, but we're in it right now. CSX is probably one of the weaker companies we have on our watch list, but it's still trading above the 200-day and the 9-day simple moving average. We're in a sideways trend, and we're bumping up against this resistance line. You'd want to see that go above the resistance. Otherwise, I don't know how much higher this will go, but it's still on our watch list, and we'll be putting some stops in on this if we can't get above this resistance. And the last one we have on our watch list is IBM. You can see IBM's been trading using the 50-day moving average as support for the last several days. We're above the 9-day simple moving average. We have some room up to the resistance. We're way above the 200-day. We're having a crossover, just a small crossover above the zero line on the MACD. The stochastic is leveling out, but that happens a lot when you get at this level. We have a nice RSI at 58 and maintaining. So IBM, you want to watch. You do have some room up to the resistance, but the 50 has been a nice line of resistance, and you can see they're all starting to bunch up the 50, the 9, and the 20 in the same general area. So that's what we got on the watch list. This week we'll be watching in case the market does a little tanking. We'll be taking some profits off of some of these, I'm sure, unless the market keeps going up. We'll set our stops below resistance lines in case we get a wick down. Or we'll take some position off if you want, half a position, just to maintain your profits. There's nothing wrong with that either.
Well, Mark, that's a lot of stocks that we did look into. And I guess that, from the time that we found on the watch list, the stocks did move a lot up. So based on our spreadsheet, sounds like, as you can see here, when we found the stocks and put it up on our watch list, this will be the price. And from that point, I guess, one stock we did have a sell order, so we took some profits. But if we, bought those stocks when it was on the watch list, based on our unrealized profit, if we just bought about 100 stocks for each of these stocks that was on the watch list when we put it up, I guess we would have been up about 3,600 up to this date. And that's like within this 2 weeks, I guess. So that's pretty impressive in a market that we have right now.
Yeah, I mean, it's a total different market than we had in December. In December, the market was going down, which is hard to swing trade. You could do shorts, which at some point we may teach you how to do, but right now we're just doing swing trades to the upside. But during a market like we're having right now, it's been pretty good. Now, this week we're going to be watching, and we want to emphasize always put in stop limits. And again, I put them in below resistance lines in case we get a market that dumps. And we'll save our profits, because right now unrealized profits means that we haven't realized that profit yet. And had we realized it on Friday at this point, we'd be up, $3,700 in a couple of weeks. But as this is a learning process and for educational purposes, we're using our guidelines to tell us when to get in and out, trying to take the emotion out of it so that we're not overreacting to markets like what happened on Friday.
All right. Well, thank you very much, Mark. This was, again, very helpful for me. I think it's always helpful to hear from you on your chart analysis and what you see in the market. And I hope our subscribers who are watching this video thought it was also helpful as well. So for more details and updates regarding swing trades and the updates of our stocks that are on the watch list each day with chart analysis, make sure you join our Platinum group. And let's successfully invest and make it through this tough market together in 2023. So see you all next week, and thank you very much.